Good morning. We begin with breaking news shaking financial markets worldwide. President Donald Trump has triggered a market sell-off after calling for a 10% cap on credit card interest rates, and bank stocks are plunging. Synchrony Financial is down 9%, Capital One nearly 9%, American Express off more than 4%, Barclays in the UK down over 4.5%. Billions of dollars in market value are being wiped out as investors react in real time. This story could impact your wallet, the banking system, and the broader economy. Here's what we know. The announcement. Late Friday night, President Trump posted on Truth Social that he wants to cap credit card interest rates at 10% starting January 20th. He wrote, "We will no longer let the American public be ripped off by credit card companies charging 20 to 30% interest." But here's the problem. No details, no enforcement plan, no legal framework, and no confirmation he even has the authority to do this. Right now, average credit card interest rates sit between 20 and 25%. Some exceed 30%. A 10% cap would be a dramatic shift. Backlash and warning signs. Criticism came fast, and from both sides. Senator Elizabeth Warren dismissed the proposal, saying Trump lacks the authority and accusing him of political theater, especially as he's pushed to weaken the Consumer Financial Protection Bureau. Meanwhile, major banking groups warn a rate cap would reduce access to credit, particularly for lower-income borrowers, young consumers, and small businesses. Banks argue that if rates are capped, they'll simply stop lending to higher-risk customers, potentially driving people toward payday lenders charging far higher rates. Why markets are panicking? Wall Street's reaction explains the fear. Credit card interest is a massive revenue source. Citigroup alone made over $8 billion from card interest last year. Analysts say a 10% cap could slash profits by up to 60% in some portfolios. That risk, even if remote, is enough to send investors running. And it's not just U.S. banks. International lenders with U.S. exposure, like Barclays, are also taking heavy losses. What happens next? Three big questions remain. First, can Trump do this? Experts say not without Congress. No bill exists yet. Second, would consumers benefit or lose access to credit? That debate is just beginning. And third, is this real policy, a negotiation tactic, or pure populism? What's clear is this: markets are taking the threat seriously, and billions have already vanished. We're monitoring this developing story. No response yet from Congress or the White House on how or if this plan could move forward. What started as a social media post is now a full-blown financial shock. We'll keep you updated.